and prior highs. Those are the references there. Of course, on the far right-hand side here, this is a 5-day composite, so multi-composite, right, profile. Right, so that's what you're seeing there. This magenta, these magenta zones, this is referred to as our 3-day central pivot zone, and that comprises, it's an average of 3 days, but it comprises the pivot point plus the midpoint of the session. Okay, pivot plus midpoint, and it's over a 3-day period. So that kind of coincides with our 3-day cycle rotation. Okay. Also, what you're seeing over here on the far right-hand side here, I'll kind of outline them. All right, we call this the D-level money box zones. And again, there's some information on our website about that. So if you want to go over to PolarisTradingGroup.com, you can take a look at what that is all about. As a matter of fact, what I'll do very simply is I'll give you a quick link. There's some videos associated with a number of our indicators and so forth. So what you can do there is take a look. And there is a video associated with the D-level money box, as well as the 3-day central pivot zone and various others. Okay, and then finally, regarding our 3-day cycle, we have our cycle indicator that displays for each particular cycle day the various range targets that are in place. So for instance, here, this big fat red line here, this is our cycle day 1 low. So that's the controlling low pivot. And then what you'll see here on the far right, you'll see labels called P. That's referred to as a penetration level. And simply what that means is it's a range, a calculated range based upon if price exceeds the prior high. There are certain range values on a particular cycle day that historically the market has fulfilled. These are not estimates. These are not Fibonacci measurements. They're actual observations over the course of 20 cycles, which is 60 days trading. And they're actual, this is the average price of those 60 days. And so we have 2 of them. We have the first one here, it's just P, and then there's the MA, which is the next one. Right. So again, these are various calculations. All right. So basically, these these represent a range target zone, if you will. Right. If the market clears and converts the prior session's high. Okay, and then vice versa to the downside, we have what are referred to as violation levels. That's all right, violation levels, and basically they're the same, similar calculation, but to the downside. So they're range targets should the price violate the prior session's low. And then the question is then how far potentially could price go based upon cycle ranges. Okay, so again, notice how I'm stressing that. These levels are based upon cycle only. They're not based upon profiles. They're not based upon Fibonacci's or anything else. Strictly prior observed actual trading that has occurred at those various ranges, right? So that's kind of the outline of what you tend to see here on the bigger picture. This is essentially our starting point. So as you can see here, as you all are very well familiar with the recent, summer activity, we've been sitting there in a range, big range. Okay. And we've seen these before. And, Essentially, though we trade the intraday, we always want to keep a picture of what's happening on the larger scale, looking for various breakouts. But these type of range patterns, um, to me, they're periods of time where the market is building energy. Okay. I know, as traders, we always want these breakout moves back and forth, but you know, we know that's really not the case. Every day, when we're looking for that big move, most days is just going to chop around, right? But as long as we have some range to work with intraday, we have some opportunities, all right? But in terms of looking at the bigger picture, now we've seen over the past few days. Okay, yeah, yesterday's the RTH session was an inside day. I mean, yesterday was really, there was a lot of movement. Okay, during the day, obviously off the CPI print, there was a fair amount of movement, but not really good smooth trading. So you also, one of the skills that you want to try to work on developing, and hopefully I, convey um, accurately on a daily basis the kind of rhythms that are unfolding. But you really want to try to, hone your skill set such that, being able to identify the type of rhythm that's unfolding, because in doing so, you'll be able to, like, think about if you have a playbook, right? Hopefully everybody does, but you have a playbook, just like a coach on the sidelines. Okay, be it football, baseball, whatever, basketball. There's a coach on the sidelines. You've seen them walk up and down the sidelines with laminated playbooks. All right. Well, those are for various scenarios, right? So in our world here, trading world, do we have a trending scenario? Do we have a ranging scenario? Where is price relative to various, edges? What type of plays? What type of trades should I be considering? All those type of things. Right? Good morning, Mini Sniper. Thanks for joining us. So in any event, we need to know what the context, is. All right. And so what we'll put forth to you today, and what we do every day in our PTG community, is we just try to make that assessment of what's unfolding. We're not trying to be world beaters. We don't have the magic wand. I don't think anybody does, but we do try to put our best foot forward with how we're seeing it and what would be anticipating if a scenario unfolds. So you'll hear me say quite often is, if this, then that, right? So the if then else type of statement. And that's referred to, again, we have a decision model uh, called the OODA loop, OODA, and that stands for observation, orientation, decision, action. Okay. So what are we looking for today? Well, overnight, a quick review of overnight. Again, our line in the sand today is 75.90. Okay, and it's essentially where the market closed yesterday. Um, our initial upside targets are 76.15. Again, you have links to the daily trade strategy there, which we write each evening, published by 9 p.m. for the next trading day. So there it is, 76.15. All right, put a star there for that getting tagged. All right, so now what would we need to see happen? All right, during the RTH. Well, for continuation, we want to see now price get above that and hold above that. All right, so that would be what we refer to as clearing and converting a particular level. All right. And then, of course, to the downside, that scenario would be if prices rotate back down below the prior close or a line in the sand 90s. We'll look for some sort of a deeper rotation. But for the most part, it's been a very, very quiet overnight activity. And again, we are in the midst of summer rhythms. Okay, so just bear that in mind. I mean, the expectation. I think you need to somewhat lower your expectation in terms of movements, right? But of course, anything and everything can happen. E-mini Sniper has a question. I have if the levels in the prior cycle have not been touched, do we still keep those levels on charts? For example, last cycle day one low and cycle day two high. Yeah, so prior cycles, so of course the controlling cycle is the current one, right? But indeed, right? Prior cycle levels that have not been touched. So as E-mini Sniper was saying, either a cycle day one or cycle day two, are they still valid? Yes, they are. Okay, but technically they're not valid for this particular day, right? Unfolding, right? Typically, in terms of the levels, I'm actually referring to the target levels, right? But in terms of like prior highs and prior lows, absolutely they're key, right? Like for instance, we had an inside day yesterday, right, on the RTH session. Again, prices didn't expand above. So are those levels, still those upper edges and lower edges still important? Sure. Okay. And again, what we're trying to do is, you don't want to just with the cycle, it's not like turning a light on and a light off, you know, all right, clap on, clap off. Really, it's there's an ebb and flow to it. So use the highs and lows just as you normally would, okay, in any other kind of reference point. All highs, all lows are always key references, right? One of the things I like to stress a lot, and I'm getting right close to the opening here, but also profile, right? Daily profiles, highs and lows of the value area. Those are very important as well, right? So keep that in mind. But certainly highs and lows of prior days, right? Of cycles, right? Again, the cycle is just a way of that's Taylor's method of trying to identify how far prices were able to move. Okay, and again, his assumption was is the big institutional players are the ones controlling it. And so, of course, as it was back in the grain days when he traded in the grain pits and uncovered kind of this type of pattern, it still applies. All right, for all the various markets. All right. All right. As we enter here, again, on the right hand side is our main chart, and we'll discuss various signals that occur on that as it unfolds. And then the two smaller charts in the middle, the two is one of our strategies based upon ATRs, average true ranges, and the way we've configured it. The top one is a larger ATR value, and the one down below is a smaller ATR value. So you'll see how they particularly operate. Okay. So for our purposes right now, the opening lean coming in today, we'll look for the market to have a long bias. All right, so early long bias. That's how we'll lean it, and we'll see how the trade unfolds. All right, you can see right now coming into the opening. So pre-opening, we had a long setup. You can see that on the right-hand screen. That's referred to as a discount. Right, so basically, a discount is a long setup structure in a bullish, uh, otherwise bullish uh, condition. Okay, so that's and then again we have our auto trade assistant ATA that actually triggered that one off, and and again we do have automated trading as well as we do a fair amount of discretionary, right, manual trading. All right, so that's pretty much it that covers everything. So you get at least the lay of the land for those that are unfamiliar. And yeah, so basically what we're going to do is just going to stay leaning to the long side early. Um, I generally am not interested in fading levels if there's a strong push into various areas. Let the market prove to us that that area wants to hold, uh, and then we'll take a decision. But again, we do follow what you'll see. We do follow very strict trade protocols. So we're not just whipping them around, right? We're very again methodical in terms of what we look for and the criteria that's associated with various price structures. All right. So if anybody is doing some trades, feel free to post what you're doing as well if you'd like to. That obviously opens up conversation. And of course, if you have any questions, never be bashful. No question is every question is valid and important. So if you have something that you don't understand or want some clarification, uh, again, feel free to outline that. Okay. And then just one last thing. I'm not typically a big jibber jabber, as the people know in our community, right? But we do want to stay on what the current theme is and what opportunities are ahead of us. Okay. All right. Sounds good. So yeah, as we're waiting for the next trade, we just obviously a trade just clicked off there right on the opening. A mini sniper has a question. Can you talk a little bit about the 3-day central pivot zone? Sure, sure. Um, Let me post up a link to that first, but I'll just give you a quick overview. There's a video associated with it, and you can get certainly a deeper detail in that video. But basically, everybody's heard of the floor trader pivots, right? The high low close, right, divided by 3. That's the pivot point, and then you have the midpoint. Simply, it's the high low divided by 2, right? So it's the midpoint, 50% point. So when we take those on a single day, we refer to as the central pivot zone, central pivot. Okay, the primary pivot. And that's based on the prior session, right? So we need to get the high low close of the prior session and the high low midpoint of the prior session, and we create a central pivot zone. And so basically, the 3-day central pivot zone is simply a rolling 3-day average of the daily central pivot zones. Okay. Now, that's kind of the construction. Right. The importance of that is um, when I was market maker back in the day, I learned about the 3-day central pivot zone from an institutional buy side trader, and that's why I carried it forward. I mean, everybody always knew about the you know floor traded type pivots. That's a universal calculation, but not many ever used the 3-day pivots. And this was something again I learned from an institutional trader that basically he said, in lieu of various moving averages, I mean, when you think about it, it's like a moving average, but the way it's displayed, it's a little bit different. And we're just basically their averages of the various structure points, right? The pivot or the midpoint. Simple as that, right? When it comes down to it. But then when we take it over a 3-day period, okay, it becomes a bit more meaningful. And then when you pair that up with, the rotation of the 3-day cycle, and again, they are different, right? They're not kissing cousins or anything like that. They are clearly different. So that's basically what it is. And so what the idea there is, the 3-day central pivot zone becomes a reference for whether the market is in a trending condition or a non-trending condition over a 3-day rolling period. Make sense, E-mini and everybody? So that's kind of the back history of the 3-day cycle. And so what I've done was, when I incorporated it into my work, um, there will be times where prices will come into that 3-day central pivot zone, right? And and I'm looking for prices to, respond, all right? Because of the way that, the current structure, all right? Okay, so what's happening here is we're getting out a little breakout move above that prior high, coming into some of our upper targets. Also, you'll see on the left-hand chart there. Let me see if I can kind of widen it out a little bit for you. Zoom in a little bit. Okay, this is our D level, and again, if you want to understand about the D level money box, there is a video on that with the link that I provided. But essentially, it's an extension of the prior highs, and you can see up here, there's also the cycle day 2 penetration level targeted basically the 2930s. But the D level is a key level from which when the market kind of pushes through, we're looking for a kind of counter reversal. Okay, we're not necessarily what we're looking for is what's up here basically, right? These are stops. Essentially, stops are in that vicinity, right? Buy stops from above the opening, the highs. Okay, so what the market loves to do, and we all know it, it looks to go up and jam the stops, right? And then if it's a false breakout, we're looking for prices to rotate back down to the highs. If it's going to be just a stop run, okay. And so what we want to do there at the D level, all right, to take a trade is simply to short that level, right? Have a managed risk amount, but we're looking for that reversal, kind of a quick reaction back down towards the highs. So that would be entry, and then take profit would be back, close into the high area, right? So that's and again, that's going to be a trade that our members will have as part of their playbook. So everything, all the various trades and things that I'm talking about are basically contained in various aspects of our Polaris Trading Group's playbook. Okay, doesn't mean you have to take it. Okay, doesn't mean you have to take it, but it's part of our playbook. So some will take it, some others it won't be as part of their core playbook. But what I'm here to do is here to outline various levels and signals and types of trades that we get involved in over here. Okay. Um, okay. Cool. Delphine had a question. We're in cycle day 2. In that case, can we close below the previous day's low? Well, most of the time the close is above. Well, so we're in cycle day 2. So what are you saying? So most of the time, what's kind of the lean on a cycle day 2? Primary lean on a cycle day 2 is to kind of balance out some of the initial cycle days action. Okay, in other words, some balancing back and forth. It can do what it wants to do. It doesn't have to close below that low if there's weakness. You know, one of the scenarios on a cycle day 2. Again, when I talk about scenarios, there are various scenarios that unfold, right, over various cycle days. But one of the typical scenarios would be to retest the cycle day 1 low to make sure it's secure. Is that an automatic? No, it's not an automatic, but it is one of the scenarios. Another scenario could be, clearing above the highs, holding above the highs, and continuing on, the cycle's rally, right? So which one occurs most often? I don't have stats necessarily on that. All right. What you want to do is you want to keep the cycle as kind of a guide, right? Not necessarily, it's not a pinpoint accurate, it's on this cycle and I have to do this. You got to be flexible to what the cycle is designed to do. So cycle day one is designed to establish a low, and many times on a cycle day one there is weakness, but then you'll have it on a cycle day one where we have a strong move off the opening, and that's of course one of the scenarios as well, right? So there's not, this must do that. Rather, it's part of the selection of scenarios that may unfold on a cycle day too. I know it sounds a little confusing at times, like because everybody wants, like definitive, it's going to do this, so I want to be able to position myself accordingly. It just doesn't work that way. I don't think anything in terms of the market works that way, right? There's your um there's your scale, all right, for those that shorted the D level up here on the left, right? Again, your take profit, as I mentioned, was back at the prior high, right? So you got that. Now I don't have a trade on the screen here for that, all right, active, but many of our people in our community here in PTG absolutely are trading that. All right, so that is one of our outlined playbooks. So now, kind of look at it this way: it's like, what happened here? Price pushed above the highs to do what? To clear out the buy stops. To do what? Right? To find some liquidity, right? Everybody calls that the liquidity grab, right? I call that the wabbit hunt, right? Elmer Fudd, right? I call that the wabbit hunt because the wabbits are just, they're the buy stops and they have no choice. They're going to get stopped out and they can't do a darn thing about it. So I call that a wabbit hunt. But basically, it's not a strong buying. It's just there to grab liquidity. Now, the key here becomes this: after that move, and it pulls back to the prior high. All right. So now what has happened? We've cleared the prior high, took out those stops at the D level. We pulled back to the prior high. Now it needs to happen. For the bullish case, that prior high really needs to hold and then continue to build volume and reason to move higher. If it just meanders around here and then fades back into below the high, okay, essentially you call that a failed breakout. It's not a failed breakout yet. But if it becomes a failed breakout, then the potential for a deeper rotation back into yesterday's range, right, begins to unfold. If it holds and we get moves back above, then that's essentially where uh, the market can find reason to play higher. So right now it looks like we got getting more of a fade back into um, more back into the range. Oh, really? Oh, all right. So we are getting a deeper move back into the range. So potential for that failed breakout. We'll see. Yeah. D level shoots and scores. Nice trade, Bruce. Nice trade, guys, over in PPG. All right. That traded the D level. right? So hopefully everybody in the pit room was kind of clear on, what that potential trade was. All right, for the folks that we do over in PTG. Okay, and again, all of these type of strategies and trades that I'm explaining, and in advance. Again, a lot of the stuff that we have, it's not after the fact, right? All of our members know in advance what to be looking for, right? And we have, again, our various levels and strategies and indicators and such that are 100% part of what we do, right? So everybody knows in advance, and as part of our educational platform, exactly what we talk about unfolds, and everybody that's a member here uh, has information on all of that, right, in detail. Okay, so again, for those of you who are over in the pit, kind of watching, you may not understand everything that we're doing, but trying to explain. All right. All right. Cool. Very good. So now what? All right. Well, it is a cycle day two, and one of the scenarios would be a push above the high, exactly what happened, grab some stops, and then rotate it back into the prior range. And that is what has unfolded. Now, at this point, we're just waiting for the next kind of structure for us, right? So we're back into what's referred to as observation mode as part of the OTA loop, right? Remember, the OTA loop stands for observation, orientation, then decision, action. So we're back in that observation mode and then the orientation mode. What I'd like to also do is give you guys, some access to some of our educational material, all right, uh, on a selective basis. So you get kind of an idea of some of the tools that we are using and some of the overall understanding of what we look for. And I guess that gives you it can give you a little bit more of an insight to much of what we kind of do here, right? So what I'm going to do provide for you here uh, is a link to the OTA loop matrix grid, and I'll show that up on our screen here in 1 second. Right, and what you see here at the bottom is a grid. It's our bias grid. We also refer to this as the OTA loop grid. So we have 7 biases that we pay attention to. And instead of looking at 7 different charts and indicators and everything else, we created this grid that, and again, this is on a 3-minute basis, but you can put it on any time period. And again, each bar is equivalent to a vertical block on the grid. Okay, and again, if you watch that video, it'll explain to you the concept of the grid. So that's one of one of the things that we do look at. And also, what I'll also provide for everybody is one of our lessons. Everybody talks about and understands, at least conceptually, the idea of thinking in probabilities. Anybody not understand that, right? You've heard that so many times. You got to think in probabilities, right? But how? What do you do? Okay, so I'm going to provide you guys a link, educational link to that, complimentary. And so that will give you a little bit of a glimpse of kind of internal of some of the educational stuff that we put out for our members, along with much, much more. Okay, so what are we on now, right? We are back at the daily VWAP, which is our kind of Romulan neutral zone. So we had our initial edge on that push above the high and the failure. So again, we had a failure to, right? What is it? What do they call that? A look above and fail. We refer to that as a peekaboo. Kind of look above the high, no sustainability, grab the stops, and then rotate it back into the mid. All right. Yeah, those videos should help keep you going. I would not recommend viewing them during the training session. Just take your time after hours, give you a little taste test of some of the things that we have put together for our members. So right now, again, we're in this kind of Romulan neutral zone here. Just going to be patient. What I would like to see in terms of bullish moves, right? A move back above that prior high, get some sustainability, above that level, and then perhaps a push, higher. Right? Could be a play for us. Recent kind of rhythms, right? We saw yesterday quite a bit. Some what I referred to as snaps and traps. I don't think that has changed. I think we're still in that kind of rhythmic mode. Right? No reason to chase moves. Certainly not in this type of rhythmic pattern. More from the range perspective, kind of the idea is outside, what's called outside in. So we're looking for trades at the upper and lower edges for, reversionary type trades back towards the middle, high volume areas. So outside in. Right? Some people refer to that way. Yes. Okay. Mm. All right. So I don't have what we want to do here. Potentially, the next trade setup will be in the top middle window. We refer to that as the A10. That's that red zone that you see, and that would be the next area to consider for a potential trade back up here near to the 20s. I don't want to actually put a price on it because that may change, but somewhere in that near to that red zone. Okay, that would be an indication then for a potential short play. So that is something that our folks are looking to play. I'm not a big fan of trading the middle. I don't like the diddle in the middle, as they say, too much. All right, so we are looking for a potential trade up there near to the 20 quarters. And the idea there is we're just looking for that to fade back, right? All right, so do have a short on. Let's see if we can get some. Let's see if we can get some love out of this. All right, so this becomes the critical battle whether or not the market wants to try to push really higher or not after that initial fade. A secondary fade here would then keep us, back into the range. Now we got a little battle here. We got our short of 810 and we got a long of a discount here. Not about similar levels. So one's different strategy. So we got kind of a battle going on here. It seems as though that the buyers here are a bit stronger. It's not over yet. Yeah, bulls are still chipping away. Buyers are still chipping away. All right, which way are we going? Which way are we going? We got one bet to the downside on one strategy. We got another bet to the upside on a different strategy. What's everybody else's positioning? What do you think? Okay, on our side, on the PTG side, we got to vote for a long and we got to vote for a crash and burn. All right, Philly D's looking to get long, waiting for a confirm. Okay, that's what makes a market, right? Difference of opinions. All right, Delphine's short after the. Okay, he's short off the 30. That's right. The first 30 minutes, Delphine's in her playbook. All right, get an 8-10 short playing. All right, Bruce is playing the 8-10 short. Okay, so I got one on the short, one on the long. I'm playing both ponies. I'm heavier on the short, I guess. You're gonna play the exacta. Kind of fun when you put it in those type of terms, right? You know, got to play lighthearted. Someone's gonna win. But you can see this is a very tough area, right? Very, very important areas of, some volume building, in this area. You can see the volume profile kind of building out. We're still within the opening range, right? Step right up, place your bets. Not really an impressive display of buyers. Some persistent buyers, no doubt, but not really a real impressive display. So obviously running into some supply. Again, all depends, who has the larger mallet, right? And this is stuff that we don't know. We don't know who has the bigger hammer here. So all you can do is you place your bet, you could get involved, place your stop, and then see who, you know, see if who has the Thor hammer, right? Who has the bigger hammer? We'll call that the Thor hammer. Exactly. Right. To state it another way. Just kind of looking at this bid ask volume ratio over here on the bigger chart. It's not really impressive, on the buying. As a matter of fact, net there's a bit more selling. Doesn't mean it can't break out, but to the upside, it's just somewhat unimpressive. But we'll see. Certainly needs to hold around the 15s on the pullback, right? 13s, 15s. Yeah, John says we just need a tape bomb, right? Yeah, I mean, buyers are still holding in terms of price structure. It's just whether or not they can eat through whatever the supply is. And again, that's another thing. We don't know how much supply is there, right? We're just constantly making assessments that, okay, buyers are holding it, you place your bet. I mean, again, the lean still remains, bullish. There you go. Buyers are winning out. Longs are winning out. All right, we got two longs on take profits, one on the discount, one on the A4. All right, you can see them clearly displayed. Philly D went longs, 21s. Okay, very good. Still hanging on a thread, but looks like we're going to get stopped out on the A10 side. So the A4, two take profits. We're gonna move the stop up there. All right, there you go. All right, so um, both of those longs played out. Okay, so A4 over here. Okay, and the discount on this side here played out. You can see those again in real time. And of course, you didn't get the A10, but that's okay, right? 2 out of 3, right? Right. Again, the idea of why take that, why take these? They're counter trades. Well, they're different strategies. All right. And so when you play different strategies, you're taking them for the strategy. Right. You're not kind of flipping back and forth. Like, well, I don't like this look, so I'm not going to take that trade. So when you're trading specific strategies, you trade that strategy as it historically has played out. Okay, you play that strategy, win or lose, right? That's Remember, losing is part of a strategy. If you've done the strategy right, meaning that if you've researched it accurately, right, Stop outs are part of a strat. It's part of the expectancy, actually, right? Stops are, are part of the expectancy. So what you don't necessarily want to do is you don't want to interfere with a strategy. If you're running a particular strategy, let it run and accept the stop out if it happens. That's because that's part of the strategy, right? But you're minimizing your losses, and then when it does work, right? Again, you're working on maximizing those gains. But you don't know which one's going to be the winner or loser, do you? We don't have a crystal ball, so you play that strategy. Right. So when you see these strategies on our screens, you're saying, well, one's short and you got a couple that are long. It's confusing. It's not confusing. If you view it from the standpoint, it's an independent strategy and you're playing that strategy. So this is what we do in terms of our work. We have independent strategies and we play those independent strategies. It's not a hedging methodology or anything like that. It's just we're playing individual structures. And as such, yeah, one is, may not play out, the other one, certainly may. Or they could both lose. They could both get stopped out. It's crazy. We've seen, things like that occur, right? So you take that trade, follow the strategy, follow the management protocol, you take profit protocol, and that's it. You move on to the next one, right? There's nothing to, be upset about or to be gleeful, joyful about. It's just you're doing your job, right? And then the market's going to pay you, you know, uh, one way or the other. Again, I do get fair amount of questions over, particularly with new folks, why do you have two different strategies? One short, one long. It's just that we're running different strategies, based upon the historicals, right? The strategy outline. It looks as though we're kind of still getting those type of rhythms, right? That we've seen the kind of the snaps and traps that we've seen pretty much over the past, 4 or 5 days, and doesn't appear to be any difference here. The jousting continues. Yeah, you're absolutely right. And again, that's why when you're doing these trades, you're not putting a whole lot of, you're not betting the farm, are you? Shouldn't be. All right, very good, very good. So we'll see how this unfolds here now. Price did hold the test, the retest of the prior high, right? Right up pretty much right to the tick, if I'm not mistaken, or maybe a tick difference. Yeah, tick difference. So we did get a retest of that opening high, and now again, right back fade into the range. So is that a double look above and fail? We definitely see, this 76.10, 76.15.20 area, or even now 25, has been really a kind of a sticky wicket for the Bulls to capture. It's been really, really sticky, and then they've made multiple attempts to move up through these areas, and the Bulls just get stuffed in their face. Okay, we do have an A10 long here, as you can see on that pullback down to the green zone. Right, 76.05.75. Right, we got first take profit out, and again, let me just highlight this. Let me zone in. We got take profit 2 out there now, so 2 scales out. This is on the A10. So again, as you can see, we got stopped out on the first one, right? And again, this is the tough part, right, for many traders, is they take a trade and it doesn't work out, and then it's the very same strategy, but now the opposite trade, right? So the first one here was a short, and of course got stopped, right? Now you got a long over here, and what do most traders do? Oh, I just got stopped out. This one's not going to work either. But they would be wrong by thinking that way, right? So again, if you're following a particular strategy, you need to take every trade. You cannot cherry pick. As hard as it may seem, and it is difficult, mentally, you have to say, I'm going to take that next trade. As hard as it is, you got to take the next trade. So you can see here, right? And that's where using, an auto trade assistant, as we put together, um, can help in the decision process. The ATA has no emotional attachment to anything. It's just a computer program, right? And so still your responsibility is to let the strategy unfold. Don't turn it off. Keep it on. Keep it going, right? Because as you see here, the next trade here now becomes a winner enough to have covered the prior loss. Stop out. Now, if you were fearful and you were frustrated because you had a first loss, and then shortly thereafter the market dropped, and you say, SOB, I had a nice short, I got stopped out, and then the market dropped, right? So you'd be, fuming at the market. But the market doesn't know what you did, doesn't care what you did. It's all in your head. So here we are, the next trade, ATR 10, same type of trade, opposite side, and now we got 3 take profits. Okay. These are the hard lessons that we all need to learn and come to grips with. And it's things like this that you'll learn, with Polaris. So now I'm gonna move up my stop. Okay. When I have 3 take profits like that, now basically the last contract is kind of like a freebie, in a way, right? So I can leave it right at the entry. And so if I get stopped out at the entry on that final one, I don't care. I don't care. My goal really is to get 3 take profits out of 4 contracts there on that particular trade. That's my goal, is to get 3. If I get 3, I'm very pleased. The idea of the fourth one is if the market begins to run, right, is to have a runner to go along with it. That's the goal. If it gets stopped out, again, I'm accepting of that, but my goal is for it to run. But I don't want that last contract to become a loser in any way. It should never become a loser. Break even is fine. A loser, no. So as you can see, I've moved it up to entry, and now there's nothing to worry about, nothing to be concerned with. Just let it run. Now, again, whether you're doing this from an auto trader perspective, as we just did there, or if you're doing it manually, right, as a manual strategy, your challenge, if you choose to accept it, is to take that trade every single time. Are you able to do that? It's not easy, because what you'll find is you're going to see conflicting information all the time. You're going to be reading Twitter or X, right? You'll see things like, not to pick on you, Philly D, but I will if you don't mind. Warsh teeing up now, as Philly D posted, right? So my question is, and again, you know, jokingly saying, well, what does that matter to me? Okay, so he's teeing up. How does that influence my decision to take the next trade? So if you find things like that, in fact, influence your decision, why do you have to explore the reasons as to why? Is there a fear of some sort? Does Warsh have, any influence over the next trade opportunity in a particular strategy? I mean, I ask these questions rhetorically, and I don't mean any disrespect, but the idea here is, who gives a shit, right? It doesn't influence my decision to take a trade, because the trade decisions that I'm considering are based upon statistical, back testing, historical of that trade, not any speaker coming on board that they're going to jib jab. Yes, it may affect the price, whatever they say, but I can't model that. I can't back test that. It just becomes noise. But guess what? That noise could actually help me. You follow what I'm saying? Could actually help, depending on what he says, right? So the core message here is, you take the same trade, you take the same strategy that you researched, back tested, have statistical efficacy on that particular trade, and then when that opportunity presents itself, there's nothing left to do but to execute that trade and then manage it. And if you get stopped out, you get stopped out. And guess what do you do in the next trade? You're going to take that same next trade. That is the most difficult part of most anybody trading, is to be able to take consecutive trades, the same trade, not just some willy-nilly trade, the same trade, same structure, same strategy every single time. It's very difficult. But in the difficulty, you truly need to get past that. You need to make peace with it and you need to accept it. So those are my lessons here today so far. Hopefully they resonate because the game is really, though it's on our screens, the true game is where? It's in the head, between your ears. All right, so I got the long sitting there. The last contract, that break even, like I mentioned, if it gets stopped out, no problem, no worries. If it can move in our favor again. Now, again, a lot of the question becomes, well, look, I could have made a sale here on that bounce and could have added some more take profit, right? And the answer is, sure, you certainly could have. But what happens if that move, right? If you take profit here and then the move started, much higher. Again, what you need to do is you need to, the question is, what am I going to do on that final contract? What's my plan on that final contract? If my initial goal is to take three take profits and to use the final contract as a potential runner and be okay with it if it gets stopped out it did, as you see it did actually, right? You need to be okay with that. That's part of the plan. And if it's part of the plan, then it's a great plan. If part of the plan is to hold it as a runner and the market cooperates and produces, a nice runner, that's part of the plan. All right, so that trade is complete. Hopefully, we're able to get something out of that that you can take with you going forward in your trading journey. And now we're just back to the Romulan neutral zone, which is simply right in the middle of the mix. All right, guys, I'm going to take just a short break, get some refreshments, and I'll be back in a few minutes. If you have anything you want to post, jump on there, give it a post. All right, guys, back with you from my short break, refreshment break. Anybody have any questions, comments? We're just kind of sitting here right now in the middle of the mix. We still have audio. Just check to see if still we have audio. Okay, good. Very good. Okay. All right, no questions. All right, that's fine. Crickets. Yeah, no questions. That's fine. If you don't have any questions, everything's good then, right? Again, again, a lot of trading is just sitting and you know and just waiting. So sometimes it's hard to fill the airwaves. And that's what I mentioned in what we do in our, the PTG community. There's a lot of times where there's just, I'm not a huge jibber jabber. Um, I certainly will explain in detail things, but not really a jibber jabber. And again, the idea is that we, just trying to stay focused on the business at hand, you know, considering what the next trade would be, what's happening, how does that fit into the plan? As you all probably know, very good trading. Uh, there's just a lot of quiet time waiting and waiting for, your particular setup. There's a lot of noise while you're waiting. Philly D asks, how do you kill time? Are you glued to the screen or are you reading the sports page? So yeah, so actually, interesting. We mentioned the other day in our PTG room that staring at the screens, the more you stare at the screen without kind of taking a break, or you're so intent always, so you're looking at the screen, waiting for your setup and so forth. It's like looking at a stereogram, right? Where you look at basically a picture of what appears to be just chaos, and you begin to see illusionary images within the chaos. It's like looking at a stereogram, right? And so when we're looking at, staring at, the charts and stuff, one, it can get very, very tiring, and and it can get very, you can begin to see things that, you know, that may or not be really uh, actionable, but you tend to, because you're sitting there so long, you tend to get drawn in to take a trade perhaps that, it's not your A plus trade, right? It's a very marginal trade. Yeah, right. And we've all experienced it. So really the key is I think if you can set alerts, whether it's a level alert or some sort of a structure alert, you know, or have have like an auto trader like what we do, will take the trade for us because we can get very tired looking at the screen. So the auto trader will when that criteria is valid, it's there doing the job for you, taking that trade. So kind of using an ATA that we call, right, the auto trade assistant, is very helpful. But what do I do in kind of in the meantime? Um, Honestly, when I'm off mic, I have my guitar in hand. So I'm sitting here, or I'll be standing there. Sometimes I sit and stand, but I'll sit. I'll have the guitar in hand, and I'm not really playing anything loud or anything like that. But I get the amp on low, and I'm just kind of a lot of times I'll just be doing kind of like finger exercises, and things like that, right? So something like kind of mindless. The idea is I'm watching the screens, but I'm not really. It's not tiring to watch the screens, and I can just watch things unfold. Okay, yeah, JB, play guitar, right? So that's what I'll do. I'll sit here and I'll have my guitar in hand, and I'll play little Van Morrison, right? So that way I kind of keep um, my attention without getting super tired. So I'll do some of that. Like you can see here, the ATA, right, the Auto Trade Assistant here, just took the A4. That's a short, right? That's a short signal. Just took the A4 automatically, and again we had two take profits. So now I can just move the stop down, right, and manage it. Same idea applies here. I'm looking for three take profits. There's my third take profit, right? So now I have my stop at break even. So again, uh, same plan applies. If we get a runner, right, we get a hard breakdown here, right? That final contract will just be, the bonus, right? If it comes back up and stops out, just like we did earlier on the A10, I'm okay with that, right? So a lot of times it's, again, the way I've created a lot of these things, the way our tools are, is I'm kind of letting the auto trade assistant do some basic maneuvering for us, and it frees up my time to be able to look at other stuff that I need to, and focus on focus my attention where it needs to in other areas, right? Because I have multiple accounts, and kind of they don't all take the same trade at the same time in the same way. They're not copy accounts, so there's a lot of moving parts on the other side. Yeah, but you should do something. Again, depending on what your plan calls for, or how intent your type of trades are. Are they swing type trades? Are they shorter term? Are you a scalper? Scalping takes an enormous amount of concentration, enormous, and because you're really down in the weeds along with the algorithms, right? Whereas, you know, I mean, we take structured trades. the ones that we've defined, and we let the you can place an order there manually, and again, that would require, right, just having some attentiveness to say, okay, I got a signal there. I'm gonna place an order, um, or use the ATA to help assist, within that. Um, I equate the auto trade assistant to when I'm flying, using the autopilot. So takeoff and landings are basically done by hand, and when I'm finally in cruise climb or in cruise, I'm using autopilot, letting that do the work for me. And that allows me to free up uh, other tasks that I need to do, radio communication, weather, things like that, right? Observing, the engine, monitoring, etc. So letting the autopilot do some work uh, reduces the workload. Highest workloads are takeoff periods and landing periods. So you need to have 100% focus on those. But using kind of the auto trade to me is equivalent to using the autopilot, right? Helps me put into a trade, helps me take me out of a trade. Gives me some bandwidth that I may not otherwise have, or my bandwidth being depleted pretty darn quickly. And that's your brain bandwidth. All right, so here it is, price coming back up. There it is. All right, coming right back up to our stop trail on that A4 short. So you can see it captured, take profit 3 down here pretty well, and it just didn't have an opportunity to get a runner. Market was not ready to run lower. All right. So again, stop was at break even there. What was the setting, Stuart asks, that made the profit point? You mean the various scale outs? The three take profits? The three take profits are based upon statistical backtesting of frequencies. Okay. So, so basically, if you kind of think about a volume profile, right? So you take all the data, historical data, and you have all these data points, right? And so what you're looking for, are high cluster frequencies points, okay, over a data series. And so obviously the higher data points are going to be, the uh, closer targets, the closer ones, right? That's going to be the highest frequency of occurrences, right? And then the next one will be the next highest frequency of occurrences. And then as you go further away from your entry, okay, naturally the frequencies are going to decrease, right? That should make obvious sense. Maybe it does, maybe it doesn't. It should make obvious sense that the highest frequency are the more closest targets, price points. So it's not necessarily a percentage, but rather I'm looking at what the frequencies are, all right, of occurrences over a very large data set. So what we're essentially trying to do is we want to take those first targets out, particularly the first two. We can get the first two. We've really covered our costs on everything. In most cases, we'll cover the costs on the first one, but once we have the two, we'll have been able to cover all costs associated with that trade. All right, and then we begin to put money. We begin to generate the alpha after covering costs. Make sense? So the targets are based upon frequency distributions, historical frequency distributions. They're not based on a Fibonacci or anything like that, right? The way I've modeled it is I'm looking back historically. How often does 1 point, 2 point, 3 point, 4 point, 5 point, all the way down the line, right? What's the frequency of those getting tagged after entry over a large data set? When I say a large data set, 500 occurrences, 1,000 occurrences. Okay, what's the frequency of that? Those are statistically significant, right? Now, again, as you kind of go down that's why the runner, right? You know, and again, how often does price run? Every day? Big runner every day? No, we know that it doesn't occur that way, right? The occurrences, the trades are going to occur in a in more of a fat kind of. You take a look at the profile, right? So the profile may look like this, all right, of occurrences. So there's your entry, okay, and the biggest amount of occurrences are gonna be here, right? The fat. And then the amount of occurrences that go from, I don't know, I'm just going to throw numbers out there from like 5, 10, 15, 20 points all the way, to infinity, right? What's going to happen to that profile? It's going to, you know, slope similar to this. So all the fat occurrences, right, are going to be closest to your entry. That makes sense? Graphically, conceptually. So that runner, you know, we'd love to get that runner, but how often does that get it? How often do you get a runner? Not that often. You know, I don't know. I don't have a number specifically on the occurrences. Probably, I don't know. You may get a couple runners a week. Depends, right? So although we love to get a runner, we look to get a runner. The only way to get a runner is to be able to be willing to give up that runner, as we just did on two occurrences here, right? Let it get stopped out. But that runner should never become a loser on its own. Break even is fine. Hey, we tried, it broke even, no harm, no foul. But when you do get a runner, those are the ones that, when they're, managed properly, because they don't often happen. When they do, you want to milk them as much as possible, because those will be the ones that will help pay over the long series of trades. Those will be the ones that will help pay for those, those stop outs that are destined to happen. So most people, again, I think somebody mentioned it already, or whether it was yesterday or today. Yeah, I think it was Dr. Dean yesterday, if my memory serves me, was that we tend to hold the losers and clip the winners, right, short. And in most cases, that's really just a mental fear thing. And perhaps it could be that you don't really have a plan, you know, to handle winners like that, right? So you have to have some sort of designated plan, how to take profit, be consistent with taking profit, and then if you're looking to grab a runner, okay, what's your plan for that? You got to be able to model it, and then have some back data to support. All right. Okay, so that one got stopped. The trailer, that is, after three take profit. So again, another good trade, another solid, example of um, how these trades are taken, how they're managed. And now just kind of, sitting back and waiting for the next kind of structural opportunity. All of this information that you're seeing and everything that's displayed is clearly um, reviewed with either within documentation here at Polaris in our educational material or in videos. All the various details of these, signals and so forth, are all part of the educational process that our members go through. It's a strict protocol. It's not whether my feelings of whether I think the market's going to go up or down. I'm very, Danny with an I. She'll be coming on, by the way, in about an hour, so stick around. Um, I think she has some interesting things she may want to announce, but I'll let her do everything. But I was talking to Danny yesterday, and we were talking a lot about this, and I was basically told her that um, I'm 100% agnostic about price in terms of direction, what it should be doing and so forth. I'm 100% agnostic. I don't care where it goes. Doesn't matter to me. If you asked me where was the prices various yesterday or what trades unfolded, I couldn't honestly. I couldn't tell you. I'd have to go back and review my own trade blotter, right? Because I'm just agnostic about it. I don't care. Right? I mean, it's like I said. It's not that I don't care. It's not a caring thing, but rather I'm just agnostic in that the market's going to do what it's going to do. All right. I'm looking to uncover patterns that I can take advantage of. That I can, repeatable patterns. They have to be repeatable, identifiable, repeatable, and okay. So, and there are multiple patterns out there. Multiple patterns, but you can't trade them all. You got to uncover the ones that have a high efficacy of repeatability and success. But again, that takes a lot of work. Certainly it does. But obviously it's It's worth it. Sam B says, learning you're a pilot. Any affiliation with United? No. All my piloting over the years has all been personal. I am a commercial instrument rated pilot. So I do have my instrument and commercial tickets, right? But no, all the flying I've done is done personally. Also added the 3-day pivot point for reference. It's the exact same as the weekly pivot, assuming coincidence. Yeah, it's the same. You know, you're just using the weekly numbers, okay? And then if you're going to use a 3-day central pivot, you know, create the 3-day rolling. It's just the 3 weekly rolling. So it's all the same calculation on different time periods. So yeah, you can do that. Bruce says I didn't know that about the targets. Yeah, we should go over that one day. It's probably not for this particular uh, forum. Let me see if I can create something. I'll give you a little glimpse. Let me give you a little glimpse here. Hold on a second to what I was talking about. Oh, okay. Sam is saying what I'm saying is the 3-day current 3-day is the same as the current weekly pivot. Yeah, it certainly could be because of all the ranged action that we've been having, right? All right. So let me show you. If I can get it to come up. One second. Desktop. Save. Oh, here we go. Okay. So let me show you this, right? We were talking about, you know, the various statistics and so forth. So let me just kind of give you a kind of a glimpse of some of the things that I do. All right. This is something that I created on my own with my programmer. Right. Everybody's familiar with the terms maximum favorable excursion, maximum adverse excursion. Who's not familiar with that? Everybody familiar with that? Okay. So what you're seeing here, you know what? One second. Let me do this. I can't draw on this apparently. I want to draw on it. Okay, let me bring this up. Okay, so what this graphic sheet shows is this is the, wait a minute here. For some reason, it's not allowing me to draw on it. No, I don't want that. Okay, stand by. I don't want that. All right, stand by, everyone. Hold on a second. Let me see if I can do it this way. Let me see if I can do it this way. So I have this on another screen, and okay. Okay, good. All right, so I think I'll be able to draw on this. Well, I'm trying to draw on this. Hold on a second with my little pen. It allows me to do here. Oh, I see what's happening. Okay. Yeah. All right. I understand. Okay. So I can draw on the chart. I just can't draw on this particular uh, sheet. Okay. So what you're seeing here, all right, is a display of a particular strategy. Okay. And what it's doing is it's displaying the maximum favorable excursion and the maximum adverse excursion. Okay. And basically what those represent, right? Those represent um, after entry, how far did price move in favor and how far did price move against? Make sense? Adverse and favor. So what you're seeing here is down below, particularly, this is the MAE, the maximum adverse excursion of a particular strategy. Again, this is all in testing. So, but what I wanted to show you in terms of the frequencies distribution is you can see here in the bottom. Now, again, these are the adverse excursions, right? So, in other words, after a particular entry, how far did it go? 0 to 1, 1 to 2, 2 to 3, 3 to 4, and so forth and so on, right? Up the scale, right? So you're going to see that the adverse excursions, you can see kind of that's little you know very very uh uh yeah, very very congested, right? So and so what you want to see is what you want to see is after a particular point. In other words, the idea of using at maximum adverse excursion, right, is determining where is a more efficient place to place your stop, all right, after an entry, taking all the trades into consideration, right? And so you can see currently with the current volatility, right? If you put your stop 3 to 4 points, 4 to 5 points, or even 5 to 6 points, okay, what's going to happen? You're going to get stopped out a quite large number of times. So maybe that's not the best place to put your stop on a particular trade. Again, this is just an example. So, right, it's not meant to be, accurate data for your to put the trade on. But the point is, right, now you can see 9 to 10, 10 to 10, 10 to 11, 11 to 12. The frequencies of those drop off dramatically, don't they? So now a stop maybe 9 to 10 or 10 to 11 in that area, because they're less frequent. All right, there's going to be less chance of getting what stopped out. Again, this is historical data. That doesn't mean that particular trade that you're trading, okay, at that moment, that can't go, -10. Certainly can, but the frequencies of them are less. All right, everybody following? All right. right? So, and then on the flip side, right, makes sense that the greatest amount of frequency, and as I was explaining it, before with the graphic, that the greatest amount of positive frequency is going to be the most close prices after your entry, right? One to two, two to three, four to five, five to six, and so forth. And then as you move further up in price, again, the idea of trying to catch a runner, the frequencies of those are going to diminish pretty rapidly, right? So again, I'm just kind of talking conceptually. So right now, on this particular example that I'm using is 279 occurrences, which is a fair sample size, but you certainly would like much more than that. But that's a pretty good sample size, right? Your maximum favorable average out of all of those, right, is 35. Okay, and the adverse is 17. So what that does is it creates a score of 2. Right, now that's not a profit score or anything else, right? That's just a scoring in that there's greater favorable excursions, right, than there are negative excursions. Okay, over again. So now that being said, this is a starting point. This isn't the end point. This is a starting point for anybody doing research on whatever they're um, what they're looking to identify. But this is a very good starting point to say, well, do you all know where you should put your stop? Matter of factly, do you all know? Or are you just taking, oh, I'm just going to put it here. I'm going to put it there, right? Oh, I think this is a good place. What is your method of actually where a stop should be placed? A stop should be placed where there's the least, very, very low frequency of occurrence. Do you know what that is for the trades that you are trading? Or I use a 3 point stop, or I use a 5 point stop, or 3.5 or 4.5 point stop. Do you know why? Is it based upon statistical back testing and occurrences, or that's where I put it? It's a rhetorical comment, right? So, you know, uh, and as Stuart was asked, about we were talking about the frequencies, right? Well, how do you know where to put the profits? Take profits, right? How do you know where? So these are just ways of, again, I'm putting that back up. So these are just ways of being able to measure, various statistics that can be very useful. Again, like I said, what I want to just stress here is this is not the end point, right? This is just really a starting point, right? But you should have a starting point, and I think at least for my work, right? And there's plenty more work that can be done off of this. I'm not saying this is the be all end all, but you should have a starting point. My starting point is always okay. Certainly, does something have some efficacy? Can I see that the market is trading? Can identify a particular pattern that repeats? And once I start seeing, noticing that there's some sort of a pattern that repeats, then I'm going to go dig deeper. Let me do a model. All right. Let me model that. Let me model, an entry based upon some basic criteria. And then in that first initial modeling, what does it look like, right, from an adverse and favorable perspective? Does that make sense to everybody? So these are processes that I think every trader should explore, right? And again, it's not it's more like the scientific approach, right? You got to create a model. You have a hypothesis, or you recognize a pattern. You have you create some sort of a hypothesis and an assumption, and you start testing it. You start modeling it. And what you'll find many times is, the initial modeling doesn't really play out. But what you probably may find in the modeling is that you uncover something else that becomes more interesting. And then you begin to model of that. So when you start modeling, when you switch modeling, you got to start from scratch again, start from number one, right? And it's a long, drawn out process. It can take a long time. And again, I have found over the years, most traders, most people trying to, find the holy grail. In most cases, it's in front of them, but they're trying to search for it, and they don't want to do the work. But they're not willing to do the work. And that's unfortunate, but uh, that's what I found in most of my experience over the years with people. But if you are willing to do the work and digging down and being inquisitive and being curious, you can really find out some interesting things about price action. And again, Edison, right? How long did it take for him to invent the light bulb? Was was it the first shot? Think about all the inventors over the world, right? Think about all the inventors. How long did it take for them to finally come up with, the various inventions and things that we take for granted today? If they stopped, right, after, the first failure or the second or third failure, and they said, screw this, then, some of the conveniences that we have today, we may not have. So under that same kind of idea, when you're trading, okay, you know, um, if you're uncovering something, then model it, test it out. You know, price. Delphine says price plus timing plus structure is the best. Okay, well, that's a broad category. So now you want to, break that down into a specific. Again, you can be very, very specific about it. I mean, I'm just rhetorical comments here, right? And but you want to be very specific, right? What about price? What about timing and structure, right? What aspects of those, right? Define them even further, right? Drill it down, into its really components. That's where all the interesting stuff, is uncovered. There's no magic wand. If there was, everybody would be doing this. A lot of people are trying to do this, but there's, the success rate of everybody, most everybody out there. Okay, but you know what? People, keep doing it. They keep working at it. So even though, most fail, they keep doing at it. They keep going after it, right? And that's, I think, is you know, all right. So okay, I'm coming down to the end of my time here for today with you folks. Again, it's been good spending some time with everybody, answering some questions. We were able to get a few trades on. Tried to give you some explanations about how we manage some of those trades. Hopefully, you're taking something back, with you going forward. All right. Stick around. Danny with an eye is coming on at noon. All right. She'll take you through uh, her visualization process and so forth, and the mindset. And if I'm not mistaken, she may be making some announcements about some happenings as we head towards the end of the summer, into the fall season. There's some great things that we're putting together, and I don't want to steal her thunder, so let her kind of guide you on what's upcoming. with the pit bull traders and our educational programs and things like that. All right. Hey, if I may ask you, I don't, we're not hard salespeople here. Okay. Be honest with you. We're not hard salespeople. Um, but I do want to, express that, if you do, if you haven't bought an evaluation, a pit bull evaluation, right? And I know some of you are trading your own monies and things, and that's great, but you'll be surprised, even if you're trading your own monies, um, you ought to try a pit bull evaluation. Okay, it's minimal expense to get onto the sheets, right? And you can use it as a way of even kind of experimenting with various ideas that maybe you don't want to commit a lot of capital to, and you're in the process of um, developing some sort of strategy and so forth, right? And but you want to put a little bit of money at work in in a safe kind of environment. But the opportunity though exists, right? Obviously to get funded and to use somebody else's money. There are several of us that we are trading our own money. We're also trading prop money. Okay. Um, and it's a good way to help support if you like what we're doing here, if you like the various presenters and things like that, right? Again, a way to show it, is buy an evaluation or two, right? Start off small, stay part of the program. It really helps, all right? And again, we're not hard sellers. We'll still be here doing our thing, but I think that if you're able to support us, the again, not me personally that way, but I mean, the pit bull traders being able to bring the program to you and the ideas and things that we're planning going forward, that would certainly help. Okay, so if you haven't thought about it, give it a shot. All right, we're trying to put something together here that a lot of these other funders don't really have. Right, everybody has access. Right, you know, affiliate codes here, affiliate codes there. I don't have an affiliate code for Pitbull traders. I'm not getting paid if you buy an evaluation. All right. They're getting the full Monty. It's them. Um, okay. So, but again, we're here to help, uh, give you some perspective. If you need some educational guidance, again, you can reach out to, any of us. Right. Also, I think part of the reason a lot of people may not want to take a funding program, and I'm being very honest here, is if they're trading their own money, do you have rules trading your own money, or do you have just loose rules? Do you really have a solidified strategy, or it's just kind of you're trading off the hip, type of thing? And you know, not saying anybody here, but if you're trading your own money, you say, well, I don't really need to trade prop money because or take an evaluation because I'm trading my own money. Okay, I get that. But what's the fear of, you know, what's the fear of taking a prop? Hey, I'll try it. Maybe you'll learn something about yourself in a safer environment about your trading that can help improve your trading by uncovering some, let's just say, deficiencies or weakness. You want to uncover those. You want to learn about those so you become better. And that's what the whole program going forward by it, guys, is going to be about. It's going to be about trader development, in many different aspects. Okay. So help us out, buy an evaluation or two, so we can continue to help, bring this program uh, schedule, to you guys over the coming months. Philly D says, David, if you're not having tons of success, does it make sense? Okay, so if you're not having tons of success, okay, obviously there's some, you know, holes in your plan, in your trading plan, right? This is where we want to offer collectively as a community, kind of like, a safe place to discuss your trading, to help you become better. Okay, and if you're having struggling, in any area of your trading, discuss it with one of us, be it myself, Bo, Manny, across the board, right? Discuss it, have a discussion, and everything is private, everything is confidential. But the idea is, if we can, help you out in any way, okay, then is that education access worth it to you, right? So it very well may be. The idea of taking an evaluation, okay, is kind of a gateway. It's kind of a bridge, right? That if you are having problems, difficulties, and you find yourself, you're trading your own money, and you're losing, you're kind of consistently, persistently losing, and you're struggling, and you're afraid to take that next trade, right? That's all real to you. And so the idea of taking an evaluation is really a bridge, right? It's a bridge to say, hey, I want to take a step back. I don't want to put all my capital at work, you know, right? Because I'm struggling with it. But you know what? I'll set aside some monies that I would have perhaps lost in the marketplace, all right, with a trade or two or more. And I'm going to set some monies aside, and I'm going to get some education. I'm going to get some guidance. I'll pay for that. I'll pay for that guidance. I'll pay for some education. I'll pay for some, mentoring, because that cost of mentoring is, you know, y- as the saying goes, right? Pay me now or pay me later. You've heard that. So the market's going to take your money, or you take that money and you put it towards yourself, your own investment into yourself via education and so forth, right? And then the idea of the evaluations, that's the bridge to get you back, across that raging river of craziness, right? In trading, right? Take a step back, get some guidance, then use an evaluation where, it's a minimal cost, but now you begin to redefine your trading. Find where those holes are, you know, right? Here's a great analogy. You're in a boat, right? It's springing a leak. What do you need to do? You need to block up that hole, right? You got holes in your trading. Find where the leaks are, patch them up. And then once you're able to patch them up, you're using that evaluation as the bridge to get you back, right, to where you want to be in a very safe, structured environment, because you're going to have rules that you have to follow, right? You're going to take an evaluation, more likely you're going to bust an evaluation. Everybody busts evaluations. So you're going to bust an evaluation. What do you do? Okay, I'm going to reset it. That's not a failure. That's feedback. Feedback telling you, I need to do more. I need to not only learn more, practice more, focus more, okay? Learn to manage, the drawdown that you have working with, right? Lots of things to learn about it, but it's more in a safe environment, right? So you spend a couple $100 on an eval, big deal, right? Think about it. It's just tuition, right? The market's going to take your tuition money, or the money that you're going to place towards yourself is tuition. You decide how you want to deploy that capital, right? So you have avenues here to be able to explore those for yourself. You have to then, consider your own situations and decide, do I want to make that commitment? And it's not a commitment to the educator, whoever you select. It's the commitment to yourself, right? Or do you want to just keep floundering down that road of, oh, I'll try this, I'll try that, I'll try this. Oh, I like what he showed me there, I'll try that. But not really understanding what it's about, and you just, oh, just gonna try to duplicate, their trades. Yeah, you may get a winner or two, on a copy trade situation, but it's not going to carry you forth. It's not going to correct any of the deficiencies that are already there, with us. We all have them, every single one of us. The only way to change those, right, is to address them. And if you're not willing to address them, then what that means is you're really not willing to change. But if you are willing to address them, that's not weakness. Addressing issues is not weakness. It's not a sign of weakness. It's a sign of strength, right? And for those that do address them, highly commended, commendable to those folks. If you decide, you're like, if you don't want to address something, that's kind of the weakness because you're not willing to make the change. But if you are willing to make the change, guys, we have resources, right? Lots of resources. And it's up to you, to reach out, you know, and again, this is not a sales pitch. I'm not here to sales pitch anything. I'm here. I tell it like it is. Guys in my membership, you know it, right? I've been saying this for years, and I'm not the best trader in the world either. I have my issues, but we work on them, and we're here together as a community. Not some screw tubers out there. And what are they looking to do? Just looking to take your money. They're not looking. They're not interested in your trader development. They're looking to take your affiliate money. That's all. They don't care if you win or lose. They're not interested in your development. Right? Danny Riley's always created this community, Mr. Top Step. The collective, as he likes to call it, of all these various rooms and people, to help. As a community. In a non-judgmental way. I win, I lose trades. Doesn't mean I'm a shitty trader. Doesn't mean I'm a good trader. That's what it is. So you learn to, you know, uh, thrive. Actually, I think in that type of an environment where nobody's judging you whether you had a good trade or not. Right? Do you remember any of the trades that anybody really does? Right? Do you remember any of the Manny's trades over the past week and a half? You could say that, yeah, Manny has had some good trades. Oh, Manny's had some stop outs. David had some good trades. David had some stops out. Same thing with Bo and everybody, right? Do you remember any of those? I'm going to say you probably don't, right? You remember they did have a trade, but you don't know what trades they were, how much they made, whatever. Okay? Because that's not what you're going to remember. That's not the takeaway on any of this stuff, right? The takeaway is, and one of the takeaways could be, are these guys really, you know, interested in my development? You make that call. So I'm going to leave you guys with that. All right, chew on that. Think about it. Again, you can always reach out to any of us with further questions and confidential conversations. And I appreciate everybody here being in attendance today on a Wednesday. I know it's a hot summer day, and you probably want to be out doing other stuff. Okay. Yeah, the A4 here did get stopped out. Okay, so it got stopped out. Okay, part of the process. So it got stopped out. We had other ones that had the winners, right? So you're gonna get. Why is it a big stop out? It's just a normal stop out, all right? So all right, so I'll leave you with guys with that. Thanks again for paying attention, and participating in the conversation. I really appreciate that. And stick around, grab some refreshments. Danny with an eye is coming on at noontime, and we're looking forward to what she has to say. All right, there she is, right there, ready to go. Okay, on the board. So I will take my charts down, and we'll call it a day. All right. And again, I'm around all week. So if you want to reach out to me, in private messages and things like that, again, I'm always around. But we'll see you back next Wednesday, same time, for our next session. So have a good rest of your day and a great trading rest of your week.